Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. My name is Ian McMillan. Today joined by Kevin Ferrari, our well-known analyst and fixed income expert. S&P sitting at 74.27, which is roughly where we were last Friday when we recorded. Kevin, anything that you think is super pertinent to share? Anything you're just dying to get off your chest?
Dying to get out of this range, I guess. It would be nice.
Yeah, we're going into
smack dab
I would
in the
say
middle.
like week 4, week 5 of the doldrums, man.
Yeah, I mean, holy cow. I mean, if you use the day we first entered this range, 59 bars, 86 days.
86 days.
So that's including weekends. So yeah, you pretty much hit right on that. 2 months, 60 days. Feels like it's been 2 years.
I've aged at least 2 years,
Right?
mentally and physically.
Mm-hmm.
But yeah, so rough day. I mean, we had some action this week. We had some volatility. Looks like we're not going to get any answers. Big move Wednesday and another big move Thursday. And like I said at the beginning of the podcast, we're right back to where we've been we're right where we were when we recorded on the 17th.
Yeah. Yeah, I mean, there was kind of some promise there, especially like Tuesday, with the move financials and like healthcare had. We'll throw like insurance into that bucket too.
Yeah, then they kind of
pretty much right away took that away.
Yeah, they even came for the Russell.
Mm-hmm. So I mean, we had some light at the end of the tunnel there, maybe, where we could start getting into and participating in some things. But then,
you look at Russell, and I mean, it's not like it's screaming in some like.
No, it's pretty
towards
controlled.
the ground.
No,
it's just the slowest. I mean, it's actually, I would say, a little bit more of a downtrend than the S&P visually.
Right. Yeah, it's like an even more controlled version of what we saw in like March of this year in like the S&P.
Yeah, this year, I could see that.
But like an even tighter, slower, grind lower. No.
It's like watching paint dry.
Right.
And yeah, big gap up this morning. Thought maybe there might be some continuation of yesterday's move. I think a lot of people thought, okay, maybe it's over. We've had our capitulation bottom. And there are some beautiful failed breakdowns, big green candles yesterday. Yeah, the market, just more typical behavior for this market. Just not really, no conviction to go anywhere, up or down.
Yeah, just chop. A lot of chop.
Breakouts don't really work. I think you saw a few areas Tuesday, Wednesday trying to go higher. Monday, Tuesday, probably better way to put that. Financials have held up well. Healthcare. Banks still okay. Insurance was a very strong one. That kind of got blocked on the head.
Mm-hmm. That was pretty short-lived. And I mean, even for the banks, it's like we talked about GSIB on here, I feel like quite a bit. That's really what's holding up the best, like your larger global, what you would consider, well, I guess based on the way the fund's name's right, systemically important. So I mean, it's really kind of your big players in the banking space, because even like KBE or AB, what is it? WB is the other one. Things like that really just kind of hanging out. GSIB's definitely holding up a lot better than those two. Doing well relative versus the S&P.
Good. They do look good.
So it's
I'm
even
also trying to hang in here today. We just cannot. The retail, XRT, things can't hold.
No. So and European financials, I think are interesting. Still
Yeah, I can see
around,
that. That would make sense with GSIB.
right? Which, it's definitely, heavier to a lot of those
Yeah, they
bigger
look
banks like
good.
that. And even EFA looks pretty much, at least on an absolute, well, I shouldn't, it's more so identical to that. I mean, I guess depending
Yeah.
on what they do with that today, maybe that's a failed breakout. I mean, it looked really good
I
yesterday.
think so, man. The boy who cried wolf.
That's the problem.
Yeah.
I guess this just talk about broad financials, insurance. That really didn't stick. Healthcare didn't stick. Is this going to stick? I guess you don't know. Maybe we just got to get moving.
I mean, your JP, what's old JP and BAC? I mean, they're holding in there. Trying this JP Morgan relative chart is, well, I mean, going in back literally my entire life. Tried earlier in the year. Thought we were going to do it back in January. Sold off. Now we're back. Bank of America holding above 60. Yeah, back to 62 today. Maybe a little bit better of a relative chart than JP Morgan. Relative chart's higher than it was in January.
Right.
And yeah, again, those would fall under your
Kind of the GSIB thing, right? Yeah.
Yeah, globally
I know,
important.
HSBC's been doing really well, and I think that's, I don't know if that's the largest holding. I mean, it's at least the largest, performance contributor, and like EUFN. EUFN versus the S&P today. They're trying to get the relative breakout here the last 2 days. Kind of testing those relative lows from back in like 2019, 2020. Kind of, I've been trying to break this level now for the last 6-7 years. So that would be, if they could do it and stick it, that would be that's quite the relative base there. You would think that thing would have some alpha to it, but I mean, that's the thing. These things haven't been sticking, which I guess makes sense, right? I mean, overall market really directionless for the most part. I suppose you have to assume the probability of those breakouts sticking is going to be less in an environment like that.
Breakdowns don't stick either.
No, right? Yeah, really nothing is. It's just you're basically in a mixing bowl.
Mag 7, all mixed up. You got Microsoft has a good move, big move. Was that yesterday? Amazon with a big move today, but then you've got Apple down 10%. Microsoft, I don't even know if you fixed anything.
No, we were kind of talking about that before, right? Like that chart you shared, was it like 470 somewhere in there, ballpark? Like that.
Yeah, there's a confluence of
levels there, really.
Resistance here.
Which really, if you really wanted to short Microsoft, this is pretty much time to do it.
This would be the spot to do it if you're into such things.
Whatever floats your boat. Yeah.
Another stock that hasn't gotten any bounce. I mean, really, it's been pathetic for, all year, really even into Q4 last year. But no bounce through any of these. Just bleeds lower is Palantir. Terrible. In the context of the last few years, a great stock. But the last 9 months, and they didn't really even try. I guess a little bit here at the end of June, they tried to, and that was one of those where it's had 2 really good earnings reports, and
like subpar reactions.
Yeah, it's just terrible reaction to them. And then you look 6 months after those, but Max, a lot of the techie stuff is just
about. I don't know. I feel like now, like a lot of these relative charts are really the most interesting, like that. Especially in like the megs or like your mega cap stuff. Like I feel like a lot we've been talking about the micro cap to mega cap chart. It's like IWC, MGC.
Yeah, that's fallen off a bit, hasn't it?
Yeah, like it's fascinating where that turned back. It was really like those kind of like summer of 23 highs, and even now below what, like 0.7, I guess, if you're actually looking at the chart, which is kind of another area you might expect to maybe see kind of some relative support. But yeah, that's really kind of fallen off. And I mean,
Look at that. It looks just like IWM, very controlled, very.
mhm. And even if you
We're
looked
just gonna walk
at
this down to wherever we're going, and I guess
200
maybe
day,
200
maybe,
day at this point.
which kind of roughly lines up. Like if you would draw a trend line, from like those 25 relative lows, it would kind of
Yeah.
match up to that. So that would be kind of interesting. Like even looking at mega cap growth just versus the mags. I mean, that's even interesting where, basically July 1st and June, beginning of July, it's an area that relationship's kind of turned back before historically, kind of April of 25, before that, kind of fall of 24. It's just interesting how some of these relative charts just kind of continue to flip at some of these levels. So, I mean, right, and you look at to kind of continue with that, I guess, kind of cap theme, like growth versus value, like SPYV versus SPYG, or you can even do it with just pure value and growth. I mean, value kind of getting turned back at some interesting levels,
I know.
like
Which I
SPYV
was
using that.
surprised with how well the Russell was doing.
Mhm.
I thought value, and then all this like
Like you're seeing a
techie
lot
stuff.
of,
I mean, the last, it was interesting. I mean, I guess kind of failed. It's hard. I mean,
like a lot of these value areas, I feel like, especially on a relative basis, had a chance to start breaking some of this stuff in relation to like growth
they
or
never
mega
do,
cap.
man. They
No, just didn't do
never.
it.
You just don't do it. Growth does though.
I know.
Growth takes a situation by the cojones, and does something with it.
I feel like you right, just keep getting that feeling that I don't think you can be surprised if, and you kind of get this feeling just looking at mags by itself. I don't think you can be too shocked if like the mags and like your mega cap growth, like stuff like that, just take off again. You know what I mean? It's like these value areas had their chance, didn't do it.
Had their chance. It's like being a value investor is like being a Republican when they control the White House and the entire Congress, and they don't do anything with it.
Right.
It's the same thing.
And especially where
Had
a
your
lot
chance. We all watched it,
of these,
and then we watched you all botch it.
watched you fumble it.
Back to growth.
Just like a Packers playoff meltdown in the second half. You pretty much know what's coming at this point. I don't know, like some of these too, how like they're respecting these long multi-year like relative rates of trend. Like you draw a trend line on the upper bounds of that. Like I feel like that's even going through like our workbooks here the last couple of weeks, just like through individual stocks. I feel like the predominant theme is like, and especially in these value areas, things that were on an absolute and relative basis performing well, and especially more so, that had really good looking absolute charts. Like once you got into that kind of relative rate of trend area, like kind of close to where you're testing those bounds, it's like immediately those absolute charts just started to pause, pull back, and it's like they just can't do it.
Can't do it.
I mean, it's crazy how many, even across different sectors, just like how common that look was.
Look at industrial. I mean, I don't know where industrials fall. Probably one that can be split between value and growth. But yeah, man, it's another set. Can't get away from a relative 200 day. Got like really good looking. I mean, like up until, look at last Friday's candle. Last Friday had a good candle, was getting a lot of attention from the chart watchers. Fumbled in the red zone. Relative chart is just cesspool.
Yeah, I kind of wonder too, right? Is like a lot of this, are we just these relative charts just going to keep flipping back and forth until we get out of this range? Like you keep thinking you're
Probably
getting, like we were talking about with value, right? Like is this going to be the time value finally takes control? Got up to an area where, okay, like now you got to walk the walk, can't do it.
Must be pretty cool to be a mean reversion trader right now.
Oh, right.
Not a trend follower. So congrats to you guys.
That's what we should be doing. Yeah, I don't know. It's hard to say. I mean, it's like you keep seeing these points where we're like, okay, I mean, we could be looking back on this in a couple weeks, couple months. We're like, yep, you saw where it flipped, and now it's business as usual for like your tech.
If this goes higher, it's going to be a heck of a move.
Yeah.
The tighter this keeps going, I mean, I know I saw a good chart and I can't remember who it was, but they had put up the Bollinger Bands. I mean, Bollinger Bands on the S&P are tight. If you look at like what was he looking at? I can't remember what he was looking at, but yeah, you get sideways. Hopefully it's a beach ball under the water
Mm-hmm.
and we get the pop.
Well, that's the thing, right? Like I mean, not that we really rely on the headlines or anything like that, but everybody at the Fed seems to be fighting whether or not we got to be raising rates. I mean, that adds uncertainty, right?
Well, I can tell you what the market says.
No, yeah. Now we can get to that, but then, like, I wonder how much of we can't really figure out what the dollar's for sure going to be doing. I wonder how much that really plays into it.
Yeah.
I have like seasonality wise, right? August is supposed
Also,
to be pretty
this
rough.
was the new Fed president's first. Was this his first like FOMC thing?
Yeah, I think so, right? Like, what was
Then
that,
they
a
said
month ago or so?
they said he was real short and sweet, right?
Yeah, and they want
Kind of back to the way it used to be. Like, I don't know
Kinda
much
want-
about Bernanke, but Yellen and Powell love to get up there and talk. And from my understanding, is he's kind of come back to where you shouldn't really hear much from the Fed presidents or Fed chairman, whatever his official title is. I guess you got these regional presidents. I don't know how they tier it up. So I wonder if that's also right. We've for a decade plus, you had a Fed got up there and ran their mouths and lots of insight and told you they tell you if they had a nightmare last night.
Mhm.
And now we've got this guy that's the opposite. And I wonder if that throws a doozy into a lot of these institutions that depend. Well, now you can buy Trump's tweets for $100 for $100,000. You can get his tweets early.
Yeah.
If you need some market moving, our president selling a subscription service while sitting in office.
Yeah, more people are probably trying to think why they didn't think of that first.
All right, so we had to move higher in rates. I mean, we're through 5.
Now,
This seems to be done. I mean, right? And this is off of almost a 3-year consolidation.
mm-hmm.
This is not coming off a rip. This is, I mean, what you expected if you were a believer in the new rate cycle. Obviously, we ripped from COVID lows through 2023, pretty big move, and then sideways for essentially 3 years. And so now you're looking at the next leg up. But, Kevin, hey, kind of an interesting move in the dollar this week.
Yeah, and I mean, it keeps getting more interesting as today goes
I
on.
know.
Because like yesterday,
Interesting.
yesterday they technically broke it under 100. I mean, I
Yeah.
feel like with the dollar, you got to give it a little bit of leeway there. I mean, we're still right around 100, just a hair over the day.
Yeah. I mean, whatever you want. Okay, 100 and a half.
Yeah, somewhere, yeah.
Yeah,
Like
if
99 and a
if
half,
you
give it
showed
like
a chart
50
to
cent
anyone,
buffer, right?
yeah, they would know where to draw the line. But clearly a very big failed breakout,
Mhm.
which looked really good. I mean, we'd been working on that since mid-June. Came down. We got to high 101s,
Mhm.
came back down, tested, broke higher, and then Monday, Thursday, and today just boom, boom, boom.
Mhm. I was like earlier this morning, I'm like, oh boy, watch, they're just gonna recover this and we're gonna keep going back and forth. But yeah, it's not a great looking candle today at all. So
So we're under, and here's the thing though. So we're
Yeah,
back under 100, and it was okay. Okay, so this started Wednesday. Stocks sold off. Dollar got hit hard. Stocks got hit hard. Thursday, dollar gets hard. Stocks rally. Today, it's dollar well off its highs. Stocks off their highs, which is interesting, right? Because I would have thought, and maybe this does come to fruition in next week and stuff like that. But if you would have told me we were going to get a failed, I just would have thought we would definitely be on day 3 of a rally.
Mhm.
Like if you would give me the one piece of data, hey, by Friday afternoon, it's Tuesday, and by Friday afternoon, Dixie's going to be back under 100 or at 100, I would have been like, okay, I bet I bet the Nasdaq's up like 6% in 3 days, and that hasn't been the case.
Right.
Again, that could always happen, but it hasn't been the immediate flip back to, okay, let's buy stocks that I would have guessed.
Yeah, but I think if, just today, if we kind of close near the top of today's range, I mean, I feel like that's more of an interesting look, I think.
You think that maybe there's something there?
Maybe.
Okay.
Right, you're never going to know until we finally get like back up above like 7,600 again. But just with
Maybe it's just everyone having to go back to growth.
that,
Maybe it'll be more of a growth value thing.
Yeah, it's so interesting. That I wouldn't be shocked. That's kind of the feeling I feel like I'm getting now. But like even now, Meg's struggling at the 200 day. I don't know. It's just hard.
Really hard.
I feel like every week mine keeps flipping forth, which
that would make sense based on the price action.
Yeah,
I can't blame you on that one. Well, that's what until you get out. You can do things in this range. Don't do anything too stupid. I'm not getting like 25% long semiconductors because I think they can rally. But it's just one day it'll end. Like you said, Mag's underside of a 200 day that's starting to flatten out. There are definitely things like flattening 200 days are just things we can get back going and this can bend back upwards, but
yeah, it's easy to get chopped up in there if you're not being careful. Yeah, really the only thing that's kind of clear, more so cut and dry, I guess, that you could really act on is kind of like you mentioned, rates. You want to
short bonds?
Yeah, just short TLT.
Short treasuries, at least.
The only thing I will say, which you're probably better off almost just looking at rates, I guess, just from a history perspective, but, like TLT kind of losing your, 2005, 2006 lows, but you kind of have some like early 2000 lows that are not too far away, closer to like 80, 81 bucks. But
what do you think, like, the exposure, right? We wouldn't have insight to this. Do you think the average portfolio that has to keep a diversified portfolio, you think that they, or choose to, I don't know if you have to do anything in this industry.
A fund with like specific mandate.
Exactly. Like, I've got to own like X amount of treasuries because I own a broad income fund. Mm-hmm. Here's what I came. $4 billion still in TLT out there, man. $41 billion in an asset that has gone down for 6 years.
6 years, yeah.
6 years. And all you had to do was understand rate cycles.
Mm-hmm.
All right, they think we're done with our 40 years of bliss. And it takes a while. Yeah, it's not going to go in a straight line. Yeah, you could definitely be short. Well, but what about junk? Is junk?
Not really.
Do you think this is, how they say it's a stock picker's market? Do you think it's like a bond picker's market? Because there's got to be fixed income that's doing okay.
Man, it's like a lot of your, short-term,
floating rate stuff. The boxes and bills and...
Or
But like on the corporate side.
Oh, could be. Yeah, are we flipping through individual corporate bonds and picking some out? I don't know.
That's got to be...
LQD is
ICVT.
Yeah, Chinese bonds
are convertible, but...
Right, Chinese bonds have held up really well. Still. We're still kind of in this range, but they keep holding it, which is nice to see. Emerging market, high yield, kind of right around... Well, it depends which one you use. They're
Chinese
still
bonds
holding up well. Your like B and triple B CLOs, those have held up well. So there's still some of your junk stuff out there, but I think it's more your it's targeted junk, I guess, to your point. Like high yield floating rate.
Yeah, emerging market. Yeah, like you said, emerging market. They're doing better. Emerging market, high yield.
Right. So it's
broad
not
emerging market.
Mm-hmm. So there's some spots, yeah. But I don't know, and especially with like what the dollar was doing before. I mean, some of that stuff was getting a little, it was like emerging market bond, a little sensitive to the dollar, unless you're trying to use like some of the like hedged versions of that. But even that too is, you know, a little sensitive there. But that's the thing though, even with like trying to short TLT here, I mean, if you look at the 20-year yield, I mean, we still haven't cleared like the highs from end of 23, you know, fall of 23. Like that's basically where we are right now. So unless you're not really in the clear until you're above like 5.4%. We're like around 5.3
Probably.
now. So could be talking about the failed breakdown in treasuries next week.
Wouldn't that be something?
Wouldn't shock me. Time will tell. Always does.
Now would be a good time to give a shout out to the sponsor of this podcast, Adaptive Select ETF, listed on the NYSE under ticker ADP. Helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend, and since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term T-bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or by calling 1-833-880-5200. Investing involves risk, including possible loss of principal, distributed by Quasar Distributors, LLC. Anything else that you would like to share with our audience, Kevin?
I mean, with the last couple of days, the yen had a pretty big pop, but I mean, that literally went up and just about kissed a 200-day. That's really where that's struggling. So,
yeah, I think the move on the dollar is pretty big. I think it's going to end up being a big deal.
Mm-hmm. I think so too. Yeah, I mean, the dollar and like a lot of these growth versus value, mega cap versus, you know, like small cap, micro cap, like those relative charts. I mean, I think we've kind of seen the reaction now, right? It's just whether or not they actually take the ball and run with it if we're just going to keep chopping around. And I guess I wouldn't be too shocked with continue to chop through August, right? Because I mean, August seasonality wise, right, isn't supposed to be anything special.
Supposed to be pretty wonky.
Yeah. And then once we kind of start getting into fall and we get the run from there, who knows? I mean, they're averages, right?
Yeah, usually that is my anecdotal experience. A couple of times I can remember kind of used Q4 to save the year.
Mm-hmm.
So we'll see what we get this year.
No. We're about to find out. It's August tomorrow.
We are.
Well, I guess we won't find out till Monday, but July's in the books.
July's in the books.
In
Over half the year's done.
A couple hours.
All righty. Well, thank you for joining us this week.
Mm-hmm.
Hope you have a great weekend, and we'll talk to you next week.
Have a good weekend.